Good afternoon, everyone. Welcome to Stock Market Today. My name is Ken Shreve, joined today by Justin Nielsen from New York City. Welcome, Justin.
Yep, here's my hotel room at the moment.
Oh,
So,
very good, very good.
and it's
Well,
not the greatest lighting, so I don't have something ill going on with me, and I didn't dye my hair red, but
okay. Well,
it's just bad lighting.
you look fine to me, buddy. All
Okay.
right. Well, before we get into today's market, it was actually interesting. Last Friday we had options expire. We had some buying late in the session. Today we had some buyers during the final hour of trading as well that pushed the Nasdaq up near its session high. But before we get into today's market action, we'll throw it over to Justin, who's got three stocks to watch.
Yeah, we can take a look at Petrobras. This is a Brazilian company, PBR, in the oil and gas field. Also, on the defensive side, we still are looking at Hostess Brands, the maker of Twinkies. So we'll take a look at that. TWNK is the ticker symbol there. And then WillScot Mobile was doing an acquisition. That's WSC. So we'll take a look at how the mobile portable storage and office space is doing.
All right. Well, three great stocks there. Let's start by taking a look at the Nasdaq Composite today, which looks like it ended with a gain of close to 0.8 of 1%. And we mentioned that pretty good close Friday for the Nasdaq. Justin closed off lows, and then some buying late in the session today as well. Volume was pretty light today. It was going to be a tough comparison because of options expiration Friday,
Right.
but still a constructive session.
Yeah, I mean it's constructive, and I mean it was good to see Friday come off the lows, but it was still down almost 1% on the Nasdaq. And while we did make some progress, there's a lot of recovery work that needs to be done, and it's hard to say that that's something that can happen right now with a Fed meeting just coming down the pike. We're going to have that announcement happen on Wednesday at 11 a.m. Pacific, 2 p.m. Eastern. So I think that might be something that kind of quiets volume down a little bit as investors are maybe not too eager to stick their necks out before that Fed meeting.
Yeah, definitely. Market is appears to be in a holding pattern here. We'll take a look at the S&P 500, which was up about 0.7%. Same situation here. Index that is still below its 50-day moving average. Had a good close near highs for the S&P 500 as well. And then taking a look at the Dow Jones Industrial Average, which was up about 0.6% today. And then wrap it up by taking a look at small caps here. Russell 2000 as tracked by the ETF here, the iShares Russell 2000 ETF, looks to be up about close to 1% today. So this is a market that is still challenged. You mentioned the Fed, obviously a big Fed meeting this week. What are the expectations for the Fed at this point when we get that policy statement Wednesday?
Well, according to the CME futures, Fed futures, I mean it's almost baked in as a 80%, close to that in terms of the 75 basis point hike. Now it's about between 15 and 20% that it's been jostling between in terms of the possibility of a 100 basis point hike. So there's certainly the idea that we're going up. It's just a matter of how much, and it will. Fed Chair Powell change any of the language in terms of how hawkish it is. I don't think anyone's expecting dovishness here. It's just a matter of how hawkish will they be.
Yeah, exactly. Still kind of keeping an eye on fear in the market. We're watching this the put call ratio just as a gauge of investor fear, but you also wanted to look at the VIX today, Justin, which has kind of had a hard time getting going here.
Yeah, I mean, the VIX, of course, is taking the volatility, right? And this is the implied volatility that you get from the options market on the indexes. So the VIX in particular is off of the S&P 500, and we really haven't gotten to the overly fearful level. It's often called the fear index, and you just really haven't gotten that high that you typically see when you're going to be making lows. Does that mean we're complacent? Well, we're not at lows that we've seen for a long time. So it could be that we're looking at some back and forth as the market is still trying to digest this higher interest rate environment. But it's one of those things where this is a secondary indicator. And as with all secondary indicators, whether it's the put call ratio, the highs and lows, the VIX, what you really have to do is make sure that you're looking at the price and volume of the market indexes themselves to get a gauge, and the individual stocks too. But that price and volume is going to be your primary indicator of what's happening. And so far, just looking at a lot of these levels on the indexes, we again we've taken some big hits on volume, and we haven't really had that balancing of higher volume on the upside. Plus, we need to get above some of these areas of resistance. I mean, even if we could get above our early June highs, that would be something showing that this is potentially getting going again. But until then, I think it's just one of those times where you have to be defensive, not stick your neck out too far, have a huge cash position, and wait for better times ahead.
Yeah, a couple of ETFs in the news today. I know you wanted to talk about. I know you're going to talk about Petrobras when we get to your individual stocks, but a lot of these oil and gas names fought valiantly off lows here with the market and had a lot of closes near session highs. This is the Energy Select Sector Spider ETF. Looks like it's getting some support here at the 50-day.
Yeah, and it's still, the pattern is still intact here. It's just been kind of making this handle that got added onto the cup. And this is a pattern that you're seeing in a lot of the oil and gas names right now. So they look okay, but it's been a little bit tough going. I mean, there have been a number of times where if you're trying to get aggressive entries here, early entries, you've had these moments where you're, making a downtrend on this handle. You think that you're making some traction, and then you just get the rug pulled out from under you. And that's something that happens a lot in more volatile markets, when you're in kind of a bear market. So it's a little bit tough to get too much excitement about some of these patterns. And I should also mention, in a lot of cases, if you wait for the breakout, that might feel like it's the better and safer place to be buying, the more traditional place. But a lot of those breakouts have been failing. So again, it just kind of gets back to the point where this is a market where the cash position is probably the better place to be.
Yeah, no doubt about that. Another oil ETF here we'll take a look at quickly is the USO, United States Oil Fund, and this looks to be a little worse for the wear than XLE at this point.
Absolutely. And remember, XLE is dominated by ExxonMobil, XOM, and Chevron, CVX. Both of those together have a 40% weight. But they do also have kind of their diversification, and it's not just about the oil, the price of oil, but they do have some natural gas exposure, and they're refining, and all sorts of different things. But the oil that itself has been struggling a little bit. And so this is where you might look at natural gas, and the ETF that you can follow there for the natural gas spot price is UNG. That has been looking a little bit better, but there's been some volatility there as well. But it's a good idea when you are looking at an oil and gas name, make sure you understand, is my exposure to oil or is it to gas, and exactly what is it that I'm buying.
Yeah, very good. Okay, well let's start by taking a look at Petrobras. The ticker is PBR.
Mhm.
We'll start by taking a look at the daily chart here. And what do you got with PBR, Justin?
Well, I mean, this is one that it was just kind of bucking this whole downtrend that was happening in the markets. You had a nice breakout from a cup base, and then you just had a nice move to a 20% gain. This is just something that you're not seeing out there very frequently, where you have a breakout that not only works, but is able to make a 20% gain to that green profit zone that we make, very visible on MarketSmith charts. So now what? It's pulled back. It basically, if you look at the weekly chart, it came right to its 10-week moving average line. Didn't quite get to the 50-day. Remember that the 10-week and the 50-day are similar, but they can differ a little bit. So you got right there to the 10-week moving average line, and it looks like we're getting support at the moment. So a lot of boost in today's action. Over 3%, but not a lot of volume behind the move. And we haven't really seen much volume on the downside. So that's good. But it's always nice if you're going to see a rebound or a reversal at a moving average line. It's always nice to see that there's some support there in the way of volume, and some, that often tells you that there's institutions behind that rebound.
Well, after the breakout from the cup base, like you said, I mean, this is really just what a classic first test of the 10-week moving average looks like. And
Yes.
we often say that this is a perfectly reasonable opportunity to start a position in a stock. If you miss the initial breakout, maybe the position isn't as big as if you were buying the breakout itself, but support at the 10-week line is often a good secondary entry point for a stock. All right, moving on.
One last thing on
Sure.
PBR, I should just note that if you're looking at a different platform at the charts, this chart is going to look a little bit different on our platform versus some others, and the reason is because this has a pretty healthy dividend. It's been doing a special dividend, so you see the yield there. That's probably not sustainable, being that large at over 40%. But it did have a recent special dividend, and what we do is whenever a dividend is more than 4% of the stock price, rather than have the chart look like it got damaged by some unknown action, what we do is we make an adjustment to the stock price, almost treat it like a stock split, to make that adjustment so that it says, hey, look, this was not the stock getting hit, this was a return of money to shareholders. And so this chart again is going to look different on our platform versus some other platforms you may be looking at.
All right. Well, great. Thanks for that insight. All right. From oil and gas, we're going to go to Twinkies. TWNK is our symbol here, and this is Hostess Brands that continues to show relative strength in this market. What do you got to say about Hostess Brands, Justin?
Well, that's exactly it. It's the relative strength, right? You look at that relative strength line, and it's hard to find something out there that has got this much strength versus the S&P 500. This is a stock that's making new highs with the market indexes themselves well off their highs, and threatening to potentially make lows. So we're always looking at the stocks with the good relative strength, but we do prefer kind of the growthier names. I mean, this has got some decent earnings out there for the last few quarters, but I mean the last quarter wasn't great. You see some red numbers there. The revenue growth, I mean, it's okay, but it's not the level that we're usually looking at for your high growth names. This is a more defensive play, right? A lot of people, whether they're kind of binge eating because they're depressed about the market, or what's going on, a lot of times the food companies do a little bit better when the institutions, who do have to be fully invested a lot of times, they're often hiding in areas that they look at as the consumer staples, the things that people are going to buy anyway, whether there's a recession or not. And so that's one of the things that may be helping Hostess Brands. I know that they have been making some news about what they're doing with different plants. I think they were closing a plant, turning it into a bakery, things like that. But overall, I think what you're seeing here is a defensive play. So for people that have to buy something, yeah, Twinkies is probably a good place to hide your money. But don't expect this to have the big moves that a lot of these growth names have. And also realize that if the market does change and shift, that money's probably going to flow out of the defensive areas. So you might see some sector rotation in that case.
So looking at the weekly chart here, this one looks like it might be a little extended, maybe from a proper buy area. But if we look at the daily chart here, it looks, so you can see that blue shaded area slightly past the 5% buy zone. What would like an ideal pullback look like at this point? Where would you like to see it find support? Where might people be able to nibble at this stock for the first time?
Well, I think the 50-day moving average line could be an area. If it does pull back, you could easily, as long as it's an orderly pullback, you could easily see that 50-day line catching up with it. And pretty soon it's going to be right there or above the breakout area. So I think that could be an area. A lot of these stocks that have been showing relative strength have actually been getting held by their 21-day moving average line. So yeah, this stock is extended. And again, I'm not a big fan of just buying it anyway, because again, the defensive nature of it, I'd rather just be in cash and be kind of waiting for my good opportunity in the growth names, as opposed to getting into some of these defensive names just to park my money somewhere. Because while they are safer, again, there's nothing safe in the market. So yeah, this is extended. Very good point there. And you could wait for a pullback, or you could just be noting, hey, am I going to be really excited about getting into the food packaged industry, or am I just going to wait until tech and those growth names come back?
Excellent. All right. Finally, let's take a look at WillScot Mobile, which is ticker WSC. And I know this was brought up on IBD Live this morning. We'll start with the weekly chart, because the weekly chart, it's got a pretty good look to it here.
Yeah, I mean, this is what I'd call kind of a base on base structure. You did have this longer base, and it tried to kind of break out of there, but now we're forming another flat base that's right on top of that previous base. And look, this is something that's not giving up much ground. This most recent flat base is only a depth of 10%. So here's a stock that did correct more for its last base, but is really trying to tighten up, and that's a positive sign. So I'm looking at this on the weekly chart as a flat base, and it could be setting up for a breakout at any moment. Now, they did just have an acquisition. I think what was Allied Trailers was the name, and what these guys do is they're providing kind of that mobile office space, sometimes classrooms, on construction sites. You need a place to meet at the construction site to go over plans and everything like that. Sometimes it's storage. So it's that mobile storage and units that they have out there. Pretty efficient in the way they do it. And it looks like investors really liked kind of the acquisition news with Allied Trailers. So right now, it's if you go to the daily, this is one of those stocks that has just had a rebound from its 21-day moving average line that's been basically holding the stock price above that 21-day moving average line really since it started moving in July.
Yeah, in a very good setup here, and one of the better looking charts in the market for sure. Well, I was looking at the market rallying late. I did see breadth on the Nasdaq was a little bit negative. We had some a lot of large cap technology stocks beaten down that led the market today. But did want to just go over a couple of house cleaning items. I mentioned Justin is in New York, and he is at the MarketWatch Best New Ideas Money Festival. That's going to be getting underway Wednesday and Thursday. And Justin, I guess IBD Live is hitting the road, and you guys are going to be on air from the festival Wednesday morning, correct?
Yes, from the festival on Wednesday and Thursday. So it won't be in my hotel room. It will be with better lighting. But yeah, we're going to be doing IBD Live in front of a live audience. We're going to be on a stage and doing it from there. Jim Ropel is going to join us on Thursday. He's a Cancelam investor. That is always great to listen to his insights. Harold is going to be there, Ali, and Chris Gessel, of course. So yeah, we're going to be doing that. We're going to have a few sessions too. So if anyone wants to join us here in New York live, you can come say hello. There's going to be also some pretty interesting names to talk to. Ray Dalio is going to be giving a talk. Carl Icahn is going to be giving a talk. Jeffrey Katzenberg. There's a lot of people that are going to be at this money festival speaking and giving insights into different ways to invest your money.
Very good. Steve Case also from
Steve Case,
AOL.
right? Yeah,
so,
from AOL fame.
Very good, very good. So lots of speakers, and IBD is going to have a big presence along with our sister company MarketWatch. So we'll look forward to watching IBD Live on Wednesday and Thursday. IBD Live will be back tomorrow at its normal time with David Ryan, and that will happen as always 6:20 a.m. Pacific time, 10 minutes before the market opens. So be sure to join us tomorrow morning with our weekly guest David Ryan, and that is going to happen as it normally does. And then IBD Live Wednesday and Thursday at the MarketWatch Best New Ideas Money Festival. All right, Justin, thanks so much for your input. That'll do it for today. I am planning on being back here tomorrow with Mr. Ed Carson. Be good to have him back. And until then, have a great rest of the day, and we'll see you tomorrow.